The prop firm industry is great for traders, allowing retail traders to access huge amounts of capital that would have previously never been possible. However, many traders are approaching the prop firm industry as a get-rich-quick scheme and are completely missing the value that the industry has to offer them. In this video, we'll look at exactly how you need to be approaching prop firm trading in order to find success in the long term. So, let's not waste any more time and let's get into it. Since the surge in demand of prop firm industry, many traders have completely abandoned their long-term mindsets and are now focusing on the short term, getting funded and withdrawing from prop firms overnight or as quickly as possible. Sadly, this mindset leads to many traders failing challenges unnecessarily and traders failing to maintain their funded accounts. At Lux Trading, we are a real money prop firm, meaning we only succeed when our traders make profits in the market. Hence, why is we put so much of our time into helping our traders manage their risk and keep their funded accounts throughout the long term. We have seen thousands of prop firm traders come through our doors over the last few years, and we have identified 3 common groups to place traders within. The first group of traders are typically those who are hoping to pass one challenge and they are failing to do that. These traders are often either inexperienced or looking to use a risk profile that is way too aggressive for their trading style in the hopes of getting funded overnight and withdrawing a big profit. These traders often repeat their challenges once or twice before completely giving up on trading as a whole. You want to ensure you for sure are not a part of this group. The second group of traders are typically going through a few prop firm challenges to get funded. They get funded eventually, which is great, but within a few months they tend to lose their funded trading accounts, either through violating the maximum loss or drawdown rules or anything else. Many traders you see on social media these days are actually in this group. Popular traders on social media are very quick to show off their funding certificate and their first big withdrawal or two, but often go fairly quiet after the first few months. That is usually due to the fact that most traders like this end up losing their accounts. This can be easily avoided with proper risk management though, and a long-term mindset. Now, the third group of traders is the one where you want to be. These traders get funded by taking their time, focusing on low risk, and having high quality setups. It can take these traders even months to achieve their funded accounts. However, these traders often maintain their funding over the long term. By using a low-risk approach and managing their risk effectively, these traders are able to make consistent profits out of the market that leads to consistent payouts and account growth, and ultimately more money in the trader's pocket than if they tried to make huge returns through high risk very quickly. And by thinking long-term, we see our traders are achieving much better results than the traders that churn and burn through their accounts rapidly. Let's walk through a real-world example that shows just how rewarding a steady and strategic approach can be. Get ready to be amazed by the numbers. In this example, we are going to assume the trader makes 1 to 2% profit each month, which is realistic and very conservative, allowing you to use very low risk. Let's start with stage 1, the evaluation to the first professional stage. In the first 7 months, our trader is at the starting line with a $1 million demo account. Aiming for the 1 to 2% monthly gain, they're able to pass the evaluation in about 7 months. That might seem like a long time, but it's absolutely worth it. The real fun begins now. And that is months 8 to 12. And we're in the game for real now. The trader is now handling a live $1 million account. Keeping up with the 1 to 2% monthly gain, they start seeing actual cash rolling in. We're talking about $10,000 to $20,000 each month, adding up to about $75,000 by the end of the first year, of which they can keep 75%. And yes, that's real money in their pocket. So even though the evaluation took them 7 months, they still have made about $60,000 that year. From months to about 13 to 24, things get even more exciting. The account scales to $2.5 million. Stick with the plan, and what do you get? a whopping $37,500 every month on average. After the firm's share, that's a neat $28,125 monthly for our trader. By year 2, they're already sitting on a sweet pile of about $335,000. Now, we're talking serious money. This is how the professionals think. Here comes the big league. Fund manager stage. From month 25 onwards, it's a whole new ball game with a $10 million account. Imagine making 1.5% on that each month. This is how the professional traders think. This is how people who go to elite schools think. This is how the bankers think. They know that once you are on such a large account, you truly need to make a few percent every month. Making just that 1.5% is $150,000 monthly. And that's even after sharing profits. Our trader takes home $112,500 every single month. Starting from year 3, the annual take home is jaw-dropping $1,350,000. So let's do a quick recap. Year 1, you pocket $75,000. Year 2, you're up to $337,500, and beyond year 3, you're earning a staggering $1.3 million annually. And these aren't just figures, they're a testament to what steady and smart trading can do. Start thinking like a professional trader and drop the retail mindset of having to make a lot of money quickly and then failing the challenges, using some of the money you win from the challenges to pay for the challenges, and being stuck in that cycle where you never truly make that your career. I mean, look at an average number. The average trader takes home just $3,000 a year at most prop firms. Now, compare that to being patient and building up a trading career where you could be earning well over $1 million each year. So, what do you think is better? Slow and steady growth of your funded trading account is absolutely what you need to be aiming for. There are a few good reasons for this. Firstly, you will maintain your funded account and not have to go through the wasted time and money of retaking your challenges in order to receive new funding. Every time you lose a funded account, it's gonna be months realistically before you're able to withdraw consistent profits from the market again. Secondly, by being consistently profitable, you're able to take advantage of the scaling plans that are offered by prop firms. For example, at Lux Trading Firm, we scale our traders' capital up to $10 million in funding. Therefore, it is much better for traders to make use of the scaling plan that is offered by the prop firm rather than seeking aggressive growth on their own. If a prop firm is willing to double your capital for making just 10% over the space of a few months, why not use that? Why risk a lot? When you have access to more capital from the prop firm, you can keep your risk profile extremely conservative and still manage to pull a huge amount of profit from the market without running the risk of over-leveraging or violating the prop firm rules. We've done interviews with some of our successful traders who have used the long-term, conservative risk approach, and they have been very successful in keeping their accounts alive. Have a look at what they have to say about it.
How I got this discipline is, I would say, mainly routine. So you should have a routine. Like, it doesn't matter if it's for trading or your normal lifestyle, you just have to have that routine in order to be able to manage the markets. And if you don't have that routine, you're just not going to go anywhere, because your strategy is not going to be followed. You have to have discipline in everything you do in order to have discipline in the markets, to be patient, to wait for your pair, to wait for your specific trade, for everything to work out.
More than 2 or 3 trades per day. It also depends on how the day is going. I have some rules. So, for example, if I lose trade in the morning, I'll just stop for the day and I don't trade anymore. And also, if I have 2 winners right away, I'm also done for the day. I find it important not to try and get your loss back in the same day. It's important not to get emotional. You start again the next day with a clear head and you just do your thing. You just follow the same rules. Obviously, you analyze what happened the previous day. And I think it's after I lose, for me, it's just better to just take a break and relax for the rest of the day.
Many prop firms, typically simulated prop firms, which trade with demo capital, are very good at their social media marketing. you'll see a huge amount of withdrawals from traders taking their first payouts. However, what you may have noticed is that you rarely see the same trader taking larger payouts or consistent payouts over the long term. The reason for this is rather simple. These traders are using high risk per trade, over leveraging their accounts, and ultimately losing their prop firm funding. All of that within just a few weeks of their first withdrawal. This is a very clever marketing technique, but something you really need to be aware of. Remember, simulator prop firms can only make money when traders fail challenges, and they only lose money on profitable traders taking withdrawals. Having success with prop firms is not easy, but if you approach it with a long-term mindset rather than a get-rich-quick mindset, you'll be much better placed to make this work for you. We've seen the industry go from a long-term mindset to a rapid get-funded-overnight mindset over the last few months, and it's leading traders down the wrong path. You wouldn't expect to get rich overnight with your own personal capital, so why would you think prop firm funding would be any different? And that's gonna be it from me for today. My name's Ben Oliver, and thank you for watching this video. If you like it, don't forget to like it, share it, subscribe down below, and let me know in the comment section what is your view on sustainable funding. If you want to get in touch with us, feel free to check out the contacts page that is in the description. Thank you for watching, and I'll see you in the next one.